Hello and welcome to another update video about XRP. Well, with XRP we have the situation that I'm still expecting another low. Nothing new here. We've been talking about that now extensively. The question is just how do we get there? We talked in the previous video about this head and shoulders that we can see on the chart. I'm not really a fan of these patterns, but I point them out when I see them, especially when they are working in line with my Elliott Wave count. And especially when two Elliott Wave counts are showing another low is coming. Now, these things can change. Understand that we have the charts are always, in movement. The charts are fluid. The prices are pretty much alive. So, of course, things and assumptions can change. But I think my views about XRP have been fairly consistent in that the move here to the upside, that was a rally. A lot of people got FOMO. The move to 55 cents was just a fake out. It was just a corrective rally. It was a very clear three-wave move. I said if we get a fifth wave, at least we can be more confident that we are at least starting something to the upside. But even then we would have seen an ABC down and could have had, gone long in here and then move up. But we never saw that fifth wave to the upside. So it remained a corrective move to the upside. And we now have the situation that we could say we have either moved up here in what you could consider an A, B, C pattern, and that this was then a higher degree B wave. So actually this B wave would sit here. What would that mean? It would mean that we're already coming down in the C wave, because you have A, B, C. Okay, so let's just assume that B wave here, would sit up there, which is absolutely possible. Then we would be coming down now in these, you see the circled numbers, yeah? That would be the wave count for the wave C. 1, 2, 3, 4, 5. It cannot be an impulse down, so it is less reliable. It cannot be an impulse because we have not reached the 1.618 extension for the wave 3. That makes it not really valid as an impulse. Well, as per the original Elliott Wave rules, it could be counted as an impulse because we have 1, 2, 3. 3 is the strongest wave. 4 is not overlapping 1, or maybe it does with a fraction of a cent or something. But exactly because of that, it might be overlapping, and we have the wave 3 not reach the 1.618 extension. So I'm considering this, if we are already here in the C wave, I'm considering this an ending diagonal, which is a less reliable pattern. But exactly in this pattern, we could now have here 4 waves complete, and we are in the 5th wave down. That's a pattern I've been showing you for a while now. We haven't made a lower low yet, but assuming we are now in this 5th wave down here, down there, we could say, and let me go to the 4-hour chart, by the way. Gonna delete that yellow circle again. Yeah, we could say that we are already here in the wave 5, and in the wave 5 again, maybe it could be again another ending diagonal, but we have a chance that we had a wave 1 here, a wave 2, a wave 3. This might be currently a wave 4 we're putting in, and then another wave 5 down. So how could we calculate the length of the wave 5? There is one way to do this, and we could take the length of the circle wave 1 here, go to the high of the wave 4, and the first target would be the 27.5 cent level. That's the 1-to-1 ratio. That's a very valid target. And the second target would be the 18.8 cent level, the 1.618 Fibonacci extension. So these two levels are absolutely valid targets. I'm still looking for another low. This wave count would be seriously challenged if we move above 41.8 cents above this wave 4 high. Would that mean it's bullish? No, not necessarily. It would just probably be a different structure. Be aware that in these structures here, if we don't have an impulse, then we have to be flexible, because if we don't have an impulse, the chart doesn't necessarily always adhere to Fibonacci extension targets. Yeah, in corrective wave patterns, so we need to have alternative counts, and in diagonal patterns as well. What is the other pattern that we've got here? And to be honest, it wouldn't really lead to another outcome. It wouldn't really lead to another yeah, it wouldn't really lead to another outcome. It might not be that, let's call it that bearish. Well, actually it could be. But it just means that we now have a chance to put a little bit of a higher low in place here. Or let's call it, no, actually not a higher low, but a lower high. But go up higher than in the first count I showed you. Because in the first count, if we are already in the wave 4, in the wave 5 down, we say we had a wave 1 down, a wave 2, a wave 3. This would be a wave 4, which is sort of naturally limited in terms of what it can do. It shouldn't really go above 37 cents. So it's fairly limited. Yes, it could go a bit higher if it's again a diagonal pattern, but then still sort of limited. You know, it shouldn't really move up much more. But if we have this whole movement sideways, not as a diagonal pattern down, but instead we say, no, the wave B never finished up here. In fact, we have here, let me think. Yeah, that all of this whole sideways movement, and you can actually see it by just watching at look at the shape. I mean, this could be just an overall Elliott wave triangle, this whole thing. A to the upside, B to the downside, C to the upside, D to the downside. And we talked about that in the last video, that we will find support at this trend line probably, and then move up possibly in an E wave and then come down. The E wave is, so all of what I've just shown you here, the yellow lines A, B, C, D, E, are part, could be part, and that's just another interpretation of how this chart works, could be part of a triangle, and this triangle would be the wave B. The wave B that I just showed you in the first interpretation could finish up here. In this interpretation will finish when the triangle is finished. The reason I'm telling you that is that, again, because of the move down, because it's not so clear, because it's just a diagonal pattern, not an impulse, it could also be a sideways triangle. We need to have alternatives, right? So in this pattern, we also would look at another low. It's just the subwave structures would work a little bit differently. And a B wave can be an Elliott wave triangle. Not every wave can be a triangle. A B wave can be. Therefore, this works out actually quite well. And in this scenario, we're now in an E wave, probably completed D. Very important in these triangles is that the D wave ends above the B wave, so it doesn't cross below it in this case. An ideal, let's calculate the target. The target for, I don't know if we can actually do that. Normally we can try. Target for the E wave would be the length of the C wave, and we take the 61.8% extension of that. So resistance would be, well, basically 39.9 cents. If we get to that level, we need to keep watching it, because this would be an ideal time to turn around. If the price reacts to that level, it is most likely here a triangle, or even if it goes below that, it could be a triangle. So both are possible interpretations, the diagonal pattern down or the triangle. What is going to work out with this? The triangle assumes that to the opposite side of the E wave, we're going to break out. So that would be to the downside. Confirmation that we are breaking down would be if we get below 33.3 cents and then follow through and break below 31.7. And yeah, then we have to expect a 5-wave move to the downside. And to be fair, the diagonal pattern I just showed you first is probably, to be honest, the less bearish one, because we're already in the 5th wave. Here, we would be only sort of, you know, the 5-wave move that I've already outlined here on the roadmap for the diagonal pattern. In the triangle, this would only start here, so it would therefore be more bearish, okay? Most likely. Good. But that's what we can expect, these two movements. We can't really tell the difference, that's the thing. We can't really tell the difference until we get more price information down here, but either way, I would expect lower lows. This would, however, be challenged, as I said, if we break above that wave 4 high here, or in the other wave pattern here, the C wave high at 42 cents basically, or 41.9, and then also break out of the triangle to the upside. It wouldn't necessarily be bullish, but we might have to change the wave count here and there a little bit. Okay, that's my update about XRP. So hopefully you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.